Hello, welcome to Morris Money, where we give you stock tips in under 5 minutes. I'm your host, Morris Willie. Today, I'm going over Liquidity Services' third quarter results, and I'm telling you why I'm doubling down on this stock. Today's video is brought to you by the subscribers. We have something in store for you guys. Go to twanmorriswillie.com where you can download the due diligence wallpaper. We have them for phones and desktop. Thanks again for 300 subscribers. For the third quarter, Liquidity Services missed their third quarter EPS estimates by 3 cents at 18 cents. The company had revenues of $69.9 million, an increase of 0.4% year over year, and they missed their estimates by $0.84 million. Gross merchandise volume, GMV, was $325 million, up 33% this year. As for fourth quarter guidance, the company said they expect GMV to be around $300 to $330 million. They expect GAAP net income to be in the range of $3.5 to $6.5 million and a GAAP diluted EPS of around 10 to 19 cents. The company expects their non-GAAP adjusted EBITDA to be in the range of $10 to $13 million. And finally, they expect a non-GAAP adjusted diluted EPS of around 18 to 27 cents versus the consensus of 25 cents, which gives the company some room, meaning that they might not hit the 25-cent EPS estimate, but they're telling you in advance. They said between, again, 18 and 27 cents, so you could potentially get a 2-cent beat or a 7-cent loss, which we definitely don't want. The interesting thing, though, is if you look at their gross merchandise volume, again, GMV, it's the highest it's been annually. Year to date compared to 2021, it's already beat it by a long shot. And quarter to date compared to 2021, it's also beat it. This is the same for revenues. Annually, it's beat out past years. Year to date, it's beat out 2021. Now, quarter to date, it's sitting at $70 million. So it stayed stagnant, but it definitely hasn't decreased. Last metric I'll talk about is their adjusted EBITDA. It's at $42.9 million for this year, which has beat out, again, past years by a long shot. The prior year, it was at $9 million, and years before, it was negative. So that's great. But one thing I did notice when looking at the EBITDAs is compared to last year, 2022's EBITDA is down slightly from $31.5 million in 2021 to $30.4 million, and it decreased quarter to date from $13.3 million in 2021 to $11.9 million in 2022. So why am I doubling down on this stock? Well, it missed EPS estimates by, which is obviously a bad thing, but in my opinion, it won't affect the company long term. The company still has and serves a niche market, the circular economy, and, well, no pun intended, but liquidity. It liquidates different companies and helps liquidate different companies and governments. Again, one segment I love about the company is GovDeals, a government marketplace where the government quite literally comes to them to sell their unwanted supplies and merchandise. How great is that? Along with that, as I've said in past videos, with e-commerce only growing, those e-commerce companies that have returns will need somewhere to offload them, and Liquidity Services is just the company to do that. So long term, this is a great buying opportunity in my opinion, as shares have sold off from the high $22 range back down to $17, $18. Great buying opportunity because I see in a couple months it getting back up to $22 or so, and long term, it's going to be a winner. But that's just my opinion. Let me know what you think about Liquidity Services down below. Do you think e-commerce is becoming the standard? And if so, do you think Liquidity Services will be the standard when it comes to the circular economy? Let me know what you think below. Please don't take this video as financial advice, and thank you for watching Morris Money.